Good afternoon. It is Thursday, April 29th. You have stumbled upon the YouTube video channel SuperGrowth MultiBaggers, and today we're taking a look at eBay, which is down sharply because analysts have decided that its short-term prospects are not that great. Anyway, to sum up our approach, we follow companies, growth companies, that have a very unusual and rare set of characteristics. They have high and accelerating rates of revenue and gross profit growth. If their rate of growth isn't that high, then their rate of acceleration is particularly high. And they have an accelerating rate of financial statement strength. That's a rare combination because growth companies tend to need capital, plant and equipment, finance inventories, hire and train people that take a while to make a contribution, and in the process, their balance sheet strength often deteriorates. And we're looking for companies where that doesn't happen. These tend to be software companies, pharmaceuticals, although pharmaceuticals certainly have research expenditures, but we're looking for companies that can grow with minimal debt. And out of the roughly 3,000 companies with market caps of over $5 million, only somewhere less than 100 qualify. We accumulate positions on weakness. There's more to our approach on the Seeking Alpha article that accompanies this video. And on our website, supergrowthmultibaggers.com. At the end, we'll provide that URL. So our standard disclaimer, this is not investment advice. We offer it as insight into what we do in our own portfolio. It's not a recommendation to buy or sell securities. And do your own research. This research is based on probabilities, not certainties. We happen to be in a line of work where there are no certainties. That's what makes it so interesting. And finally, if you hear snoring, it's not me. It's my dog, Fozzie Bear, now 13 years old. She sleeps 23 and a half hours a day. Other than commenting on Fozzie Bear's snoring, your comments are welcome below. All right, let's take a look at the overall risk level of the market. As of a couple of hours ago, when my assistant prepared this, current stock price of the S&P 500, just under 420, buy at level 397.66, sell at 440, slightly closer to the buy at than the sell at. Our overall rating on the market, fairly high. New purchases 6% of cash position. So this is a printout of buys and sells as determined by our artificial intelligence pattern recognition software designed to buy on weakness and sell on strength. So it's looking for particularly strong moves one way or another and attempting to capitalize on them on the basis that particularly sharp downturns or upturns are often emotionally inspired. So here you see the purchases as determined by the algo and the sales. It's not, it basically what it does is that it looks at all the patterns that have occurred over the last 12 months, identifies the one that was most profitable, and extrapolates that into the current market price to determine a buy and sell. And we're pretty much in the middle of that buy and sell in the S&P 500. It also looks at the 100 or right now I think it's 90 companies. Whatever it is, I don't know what it is actually. Now that I think about it, the algo actually is looking at 140 companies, including ones that we've been in over the last 12 months. It compares the buy at and sell at level of each one to the current market and just reaches an assessment of how risky the market is. And right now, as I said, our risk assessment is relatively high and fairly high. New purchases 6% of cash. Okay, moving on to eBay. This is a daily chart of the stock price over the last 12 months. And you see this pretty significant decline here today. What happened is the company announced earnings yesterday and gave a Wall Street analyst phone-in interview. And in essence, management said that, the company exceeded expectations in terms of earnings and offered some relatively neutral comments on guidance. Analysts thinking that they can digest this information and predict the future are concluding that the short-term prospects of the company are relatively poor, and the stock is down 11%. We don't predict the future. We just don't think people can reliably enough do it to make money. There are lots of studies online. I have one linked to in the Seeking Alpha article. The track record of analysts trying to predict the future is just about as good as a soothsayer's, and yet it seems to have a profound impact on stock prices, which a thoughtful investor can often take advantage of. I have in the Seeking Alpha article the exact quotes that referred to guidance, etc., by the interim chief financial officer of eBay, but they're not that bad. He also talks about all the $3.5 billion they've made in the last year off of a division that they basically transferred to another company, and the company's doing extremely well. If we look here at, these are the key financial statement trends. Top one is free cash flow, middle one is financial strength, bottom one is our estimate of intrinsic value versus stock price. And the problem with eBay is they kind of were meandering along in a kind of on a path of mediocrity for several years, but about a year ago, the company got a new CEO. His background is extremely impressive. He actually worked at eBay at one time. Then he left eBay, became the chief operating officer of Walmart e-commerce and Walmart's store number 8, Walmart's incubation hub. He's had leadership roles as CEO of Sam's Club, Executive Vice President of Membership and Technology, Sam's Club. Anyway, the exact details of his background are in the Seeking Alpha article, but this is a guy with a very impressive background, ideally suited to eBay. He's been reorganizing the company, getting rid of divisions that they don't need to focus on what they can truly excel at, and the progress is being reflected in the financial statement results, and that's what's attracted us to the company. Here, we'll take a look right now at the growth trends. Revenues have not been doing much for a long time, but you notice the very strong operating free cash flow and particularly strong pre-tax free cash flow, which gives these ratings here, or conclusions on overall financial statement trends. Very impressive. Here that's the same chart, I'm sorry. Here's the momentum report, and you can see where this was the first quarter that the new CEO took over. Revenue, gross profit, pretty flat. Overall financial statement trend momentum, however, excellent. And the comments down here, down the left side. Looking again at the stock price chart over the last year, the algo only bought once over the last 12 months at 26.06, sold a few days later at 30.20. I think that was like a 20% gain, 16% gain in 3 days. So it took the fast and easy profit. Typically, well, the SPY chart is more typical of the number of purchases in a particular year. And it's just been particularly stingy in the case of eBay. Basically, I think the company's been undergoing a fair amount of change, and the algo has not identified patterns that repeat that it can take advantage of. However, noticing the significant drop today, the current buy at indicated of 52.26 versus the current stock price of 55.56. So we're trading just 6% above the buy at price, and since the stock is down 11% today, it has alerted subscribers to the potential opportunity that may exist should the current trend continue. Okay, that's it for today. Thanks for watching. Thanks for your interest in the research. You can learn more about what we do on our website, SuperGrowthMultiBaggers.com. You can become a subscriber to this YouTube channel. You can share the video, of course. You can comment below. I try to respond within a day or two, sometimes quite quickly. And thank you again for your interest in the research today.